Hey gang, Carl White here. You are listening to Loan Officer Freedom, number one podcast in the world today for loan officers. Thanks for you guys. I'm your host, Carl White. I think I already said that. Today, hey, I got a very special guest, a good friend of mine, timely topic. I'm joined today by Jody Bruns, who's the founder of the Certified Divorce Lending Professional Program, and she's kind of like the who's who when it comes time to bridging the gap between divorce, like for loan officers. How do you get into the divorce market? Because it's kind of like, so Jody, in the I always thought of the divorce market. I like I don't have to convince them they need to do something. They kind of call me and saying, Carl, we need to do something. Is that kind of how it usually happens?
Kind of in the traditional space, yes, where the divorce is final, they call the loan officer and I just got my court order. I have 90 days to refinance. And there you are sitting there and you're trying to figure out how to put the divorce into the mortgage when it should be the opposite. And that's
Hmm.
actually what we have tried, and we have successfully been able to remanipulate, if you will, the the entire divorce mortgage planning section of how it happens in divorce. And we have been getting the attorneys to really understand that they need to integrate divorce mortgage planning into the early stages of the divorce. So our CDLPs are trained to sit at the table, find strategies, sit there, recognize conflicts between what they're trying to do on the legal side to the tax side, and how it's going to all blend in and affect the mortgage side of it. So we're trying to re-engineer, if you will, divorce mortgage planning.
Yeah, I think what's kind of cool about what you guys do is you're not just, you don't just have a system that helps just the family. Like it's helping loan officers stand out and close more deals. And when we were talking in the green room, you were telling me that, oh, Carl, this goes way, way more than just getting loans, that like you guys actually found a clever way to get paid even if you don't do the loan.
Yeah.
So talk to us a little bit about that.
So I would say the most frustrating part of being a loan officer working with divorcing clients is you spend all of this time helping to strategize, devise a plan, and two things happen. Either they say, well, we're not going to do anything, we're going to leave everything as is, or worse, they take all of the information and the strategies you put together and they close with their brother's cousin who just got licensed yesterday. So it's been frustrating for our members being in that situation. It almost makes divorce lending unsustainable. Yet it's an industry that divorce doesn't stop. It continues to happen regardless of inventory, regardless of rate. And so about 2 years ago now, we were able to finally figure out a very compliant way. Compliance is important to all of us. Compliant way to structure our CDLP hybrid business model is what we refer to it as. But the loan officers, the CDLPs, I won't call them loan officers at this point, the CDLPs are actually financial neutral paid consultants. So they're being paid either hourly or on a package deal how to, develop these strategies, put them into play. They're expert witnesses. They're going to mediation. So you're paid up front. Your knowledge now becomes your product. And then what's really cool about it is when that divorcing homeowner, whether it's both spouses or one, need purchase loans or they need to refinance, your conversion rate is much higher because
Mm.
they've already trusted in you. They've already invested in you. You're already the one that provided the strategies and the solutions. So it's really cool. We kind of took that unsustainability out of the picture and came up with the strategies and the solutions so that you are paid and then you can still get paid for doing the loan.
Yeah, and I would say this is one of those things. And look, nobody's going to sit here and celebrate, divorce, right? We
Yeah,
know it happens. I don't know what the official stat is. I've always thought like half the time, right? And certainly nobody's going to celebrate that. And of course, people are going through trying times, and many of our listeners know exactly what I'm talking about, frankly, better than I do because they've gone through it themselves. But it seems like it's like an endless source of business that again, I don't have to talk them into doing something. They have to do it, right? They're going to do it. Hey, let me ask you something. So, like when you talk about so there's two ways to get business on here. So
Mhm.
number one, or there's two ways to get paid here. So number one, close a refinance, or you refinance into whatever her name, and then he's going to go out and buy a new house. So actually get two mortgages that way, or vice versa. Have that. But then this other way, we're charging for consulting on guiding them through the process. um, how did you start that? And like, what kind of money are we talking about here?
So again, I had been working on trying to find the solution for a long time. And I don't always read RESPA and Reg Z and ECOA, but that was our hiccup. That's where we were bumping up against these guardrails, and that was the hurdle I had to overcome. And so when I started looking at, Reg Z, it said it was all about intent, your intent to extend credit. And that's where ECOA kicked in, where you couldn't charge a fee for a divorcing homeowner if you didn't charge a fee for a first-time homeowner. So that kind of is where the light bulb clicked on. And so I just started digging deeper and discovered that you could be a third party providing information if your intent is not to extend credit at that time. So our hybrid business model, we identify the key points of when you start the origination part, and we have specific compliance disclosures that you walk the clients through at specific times. And it is those compliance documents and the way you manage these two arms of your business that allow you to stay in compliance. And in the very beginning, even some of our members, they were like, I don't know, that's awful, scary stuff there. But I will tell you, we've had multiple compliance attorneys in the different mortgage companies that represent our borrowers look at it and go, big thumbs up. We recently had a CDLP at a bank in Nebraska, a federal bank, and his president was, yeah, I got to look more into this. But they happened to have their annual their OCC. Here we go, Jody. Their annual OCC auditor, they are doing their annual audit. So the bank president went up to this auditor, presented our platform, and the auditor for the OCC even said, there's no issue with this if they follow their procedure, use the disclosure documents, everything. So it answered multiple problems. How do we get our CDLPs paid upfront for designing strategies, coming up with all of this information? And then how do we also allow them to close the loan and be compensated on the origination side as well with a commission? So it was a pretty big feat, but we achieved it. I'm pretty proud of that.
So on the consulting side, like what are we talking about here?
I will tell you, we do it in a couple different ways, but the attorneys are the ones who are telling our CDLPs, you should be charging anywhere from $175 to $250 an hour. And it's awesome getting that feedback from them. We don't necessarily offer, and these are our CDLPs offering these rates, right? We don't dictate that. But we advise that they put it into like a package deal, because they're getting charged hourly by the attorneys and they don't want another hourly fee stacked on that. So I would say our average base price for the packages are anywhere from $1,500 to $3,000. It literally depends on what the client needs. And I am not kidding. You have these strategy calls with the divorcing clients, and they're always saying, send me the payment link. We have attorneys, believe it or not, who are retaining our CDLPs directly and then they're billing the hours out to their clients. So we don't need to convince the clients that they need our services. The attorneys are bringing us in. And here's one last thing on the fees. We were really kind of nervous at first when we rolled out this platform as to how will the attorneys and the mediators take it that all of a sudden a CDLP no longer says there's no charge for my service, I'm compensated when I close a loan, to here's the fee structure for what I provide. Believe it or not, they have said to us, it's about time. We never understood why you couldn't be compensated in the first time. And they also begin to say, now we can bring you in on even more cases because your income is no longer dependent upon the outcome of the divorce. So it was a huge shift in the dynamic of how the CDLPs work, how they're brought into the cases, as well as the perception from the family law industry back onto us as neutral parties and professionals.
And it seems also that like these certified divorce lending professionals or the loan officers that go through your program, um, it really seems like the idea of the ups and downs of the market, it it kind of takes that off the table because again, this is not like, well, we're going to wait and see if rates are better next year, or well, we're not really sure if we want to like it. It seems like rates are up or down. That doesn't really affect their timeline of the of the the tragedy their family's going through, or maybe the relief in some cases, I guess. Whether it's a tragedy and you go, hey, I got to get out of here, or it's a relief, I can't wait till this is over. This is not one of those let's just kind of wait and see things. So how do we so do I get most of my business, do I get introduced to the client? Well, I guess we got two clients here. One client might be the attorney contracting my service to help him or her out, right? And then the other would be the actual people going through the divorce and whether they're paying my consulting fee or using me for my mortgage process. Let's what percentage on average, like just kind of more or less, how much of my business, like once I get this certification, how much is my business of this is going consumer direct and finding these people going through divorce and offering my service to them direct versus a referral from the attorney? Where's most of the business at?
Okay, well, let me address something about the rate first before we jump forward to that. A lot of people assume that it's a rate insensitive industry. And I've seen people advertise you can rate proof your business. That's actually not true. Rate does matter, affordability matters, cash flow matters, but the conversation, it's different. A lot of them are fixated on their 3.25% interest rate right now. Who in their right mind, right, would want to go up to 6.5%, 7%? Nobody. We have to have a different conversation with them. Their focus isn't so much on rate as it is on cash flow, because a chunk of their income may be leaving. So as divorce mortgage planners, we're working with the entire team to figure out how can we better strategize and restructure the settlement agreement so that when we do have to refinance, we're not taking such a shock. And so we can't really say that rate doesn't matter. I think it does to everybody. So now to your question about how do they build and market? I always say if you go consumer direct, you're transactional. You're not relational. You have to replace that client every single month. We really help you build and grow your attorney referral business, mediators, financial advisors, divorce coaches. There's tons of divorce professionals out there. That turns that relationship into an annuity where they are referring you clients nonstop. The other thing you have to think about on the divorce side is where are you really going to get them? If you pull records, public records from the courthouse, you don't know what the story is behind that divorce. I'll give you, this is a dramatic example, but it was shared to us one time by an attorney I knew, and I love using it as an example. When you drive around your neighborhood, right, and you see a new for sale sign, sometimes you're like, oh man, I can't believe they're moving, or I wonder why they're moving. Or us in the mortgage industry, we say, I wonder what it's listed at. We don't know what the story is behind that for sale sign. Just like we don't know the story behind the divorce filing. And in one case, and it was a true story, the wife had filed for divorce. So it shows up on public records, but the husband had not been served yet. And they hadn't been served yet because they were trying to make sure the wife and the children were in a safe place before he found out. Well, unfortunately, it was a real estate agent. They pulled public records and they contacted the owner of record and said, hey, I'm really sorry you're going through a divorce. This is where I specialize in. And it put the wife and the children in a very bad situation. So that's like one of the worst case scenarios. But from a business strategy, from a professional strategy, don't go for the consumers direct. Always go for the professional referrals. It'll create a much more sustainable and successful practice.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. I couldn't agree with you more. So early in my career, I got a list from the county of all the people filing for divorce, and I spit out a letter to them. Yeah, that was not knowing, right? I'm gonna help people, not to hurt people, but yeah, that was definitely not the right approach. So
Yeah.
I wish I'd have met you before I did that.
It backfires,
I got a little bit of a black eye by mistake. Hey, so for the loan officers listening to this and they're going, look, I've never worked with attorneys before. I wouldn't even know where to start. Like, what would you say to that person?
It's about value.
Hmm.
Right now, our attorneys are telling us that loan officers are knocking on their doors right and left because originators are looking for new pipelines. They're looking for new referrals. And you cannot approach this from the traditional loan officer mindset about, I'm really good at what I do. We've got the best rates, the best service. They don't care about that. They care about, what do you bring to the table that will help me push my negotiations further down the road? Or what value do you bring that is going to help my client move forward into a better life post-divorce? And you have to have that value, service-oriented approach to this industry, or you are just another loan officer knocking on the door, trying to sell product and commodity versus value, service. And there's a saying that is very true in the family law industry. The attorneys will not care about how much you know until they know how much you care. And that's literally true.
So when you say I need to bring value, all right, Jody, I wouldn't even know where to start with that. Like, really, I'm not playing devil's advocate here. Like, this is your game, not mine. Like, you're the expert here, which is why I've got you on the podcast. There's a reason I didn't do this. I didn't do this topic by myself because I have no clue, right? So, and I get it. Your course is very, very in depth and goes very in depth on all this stuff. But just give me kind of an idea. What do you mean by value? Because I get a little choked up going, I don't know anything. I don't have anything of value. Like what are we talking about here?
Okay, so there's one thing I share with all of my CDLPs to share back to their attorneys is that what may be available as a legal option may not be available as a mortgage option. Okay. So one of the values that we bring is when we're involved in negotiations and the settlement process, they have us review the draft copy of the settlement. And we can then look at the language that's used. Is it going to take the equity buyout, how they have it structured, from a rate and term limited cash out refinance to a cash out refinance, and literally based on language in the settlement agreement.
Mm.
A lot of times right now, there's lump sum buyouts. Maybe you're getting a $200,000 maintenance buyout. Great, you have a fat bank account. You have no income to qualify for your refinance. So we may work with the divorce team and the financial team. We understand, we teach tax codes that can take that 6-month requirement out for maintenance into 1 month. So we really are sitting there strategically taking the blinders off. We, as traditional loan officers, we're taught to ask the question, can we close it or can we not close it? No, move on. As divorce mortgage planners and CDLPs, we're literally sitting there saying, how can we make this work? And so we're not afraid to ask the divorce team, are you open to new suggestions, new alternatives? And they're like, well, what do you mean? And then we start going down how we can restructure this to that. Maybe shell games sometimes, and how things are classified, and, not using equalization payments because equalization payments are not recognized in the mortgage world. How can we reclassify that, but yet meet all of the requirements from a legal standpoint so that when the judge looks at the settlement agreement, they're like, okay, this works.
And you can help me get confident on doing this stuff. Is that correct?
100%.
Even me.
100%.
Hey, so is this just for like experienced loan officers, or can new originators find success doing this also?
It's for everybody. And I always recommend that you do your own assessment. And we walk through that too if you have a strategy call with us. But it's not always about how well connected you are, how many loans you've closed in the past. It all literally comes back to mindset.
Mm-hmm.
Are you a strategic thinker? Are you willing to learn and not think that you know everything about guidelines, therefore you can work with a divorcing client? It's two entirely different things. And so I think that, yes, if you're a high volume loan officer, producer, this adds another vertical, to your income and your referral sources. But I have found the ones who really succeed the most are the middle, the middle ones who maybe feel stuck. They are trying to get into the real estate agents that the high producers already have. Well, this is an avenue where you don't have to have every relationship in your in your marketplace. You only have to have a few. So if you're willing to learn, if you're confident, if you can change that mindset, it can take that mid-level producer up to the next level. And even the newcomers, the guidelines, how to take a loan application. Maybe you feel stuck, maybe it's hard for you to open up these new partnerships. If you're willing to learn and go to our coaching calls that we have, use our content, there's no reason to do it yourself. We already have it built out successfully. So it could literally work. And I've seen it work for all different levels of originators. It's right here. Are you willing to unlearn the traditional way you've done things to learn a new way of doing something that will produce a continuous amount of success and referrals, regardless again of rate or the inventory, the spring cycles, et cetera.
Yeah, I like the way that you point out that as far as getting the attorney to work with me, it sounds like they're kind of looking for a solution also to help with their clients. And gosh, who doesn't want some help? And in this case, it doesn't cost the attorney anything, right? Because it's passed on to the client, and it helps solve a problem for all parties concerned. Hey, if somebody's interested in finding more about the certified divorce lending professional, or the things that you offer and help loan officers do to create a pretty unique niche. Like, we all know the money's in the niches, and boy, this is one that, gosh, you're literally that I know of. You're the only loan officer I know of that literally targets this model own, like this is your main thing. And
Yep.
so it seems like it's not a lot of competition in this thing. But anyway, somebody want more information. What's the best way to find that out?
So you can use our shortcut URL. You can visit getcdlpcertified.com and it'll take you straight to our CDLP landing page at our Divorce Lending Association website. There's tons of content there. There's a couple videos, a readiness checklist. But if you have additional questions, there's also a link right there to where you can schedule a strategy call with our team.
And that's CDLP, Certified Divorce Lending Professional. So was that, give me that website one more time.
Get CDLP Certified.
Perfect.com.
Yep. .com.
Awesome. Awesome. Hey, once somebody goes through the certification, what kind of support do they get, uh, to actually build their side of the business?
Yeah, absolutely. Great question. I never wanted this to be a one and done. And I certainly didn't want to just give a certification and have everybody go out and figure it out for themselves. So, with our base certification, you get access to our business development program. We have outlined the steps, how to knock on the door, how to get past the gatekeeper, how to get the meeting. And some of you are good at that anyway. But the bigger thing is, how do you deliver a referable message once you're sitting there? You're not loan speaking, you need to CDLP speak. And so we have that all outlined for everybody. And I did it because I didn't want hundreds of CDLPs out there making up their own messaging, and then there's conflicting stories. And I think that builds towards our credibility also in the family law industry. But then for those who really want to take this seriously and really succeed, we have various coaching levels, marketing support, one-on-one coaching. There's a lot of masterminds going in. And what I love about what we've built, yes, I understand that each and every one of us are competitors on the street, but within our community, we're actually colleagues. And in an industry like the family law industry, they recognize that. I get calls regularly when I'm talking to attorneys that say, hey, I saw a couple of your CDLPs at a conference this weekend. I can always tell when I'm talking to a CDLP versus a loan officer, but more importantly, they recognize and appreciate the fact that we're not looking at them like leads, and we're not competing, that we actually are supporting each other. And that bodes well for the success that we see internally in our coaching calls and everything. So it's a great community that we've built, and I'm really, really proud of it.
I like that. So, hey, so for our listeners listening in, I think the takeaways I'm getting from this isn't about chasing rates. And I love what you said, Jody, that which, and I'm going to paraphrase this because I think it's having gotten to know you, I can see that's where your heart is. This is not about gouging people or taking people that's in a bad shape and
Absolutely.
quick. Let's how much can we get out of their wallet? It's not about that, but also it's not. It's not so much about chasing rates or chasing deals or scraping the bottom of the barrel for leads. This is about stepping into a place where people really need you. They
Mm-hmm.
need you now. Building with you building a reputation as someone who solves high stake problems, high trust problems, right, kind of thing. And so, as you listen to this today, and you go, "Hey, I'd be interested in taking a peek inside and see what this looks like, and see if this isn't part of my next chapter." I highly encourage you to go check out Jody's program. Jody, one thing that I've always been a big fan of is doing something that I call octopus marketing. Have you ever heard me talk about that just by chance?
I think so. I think we talked about it a couple weeks ago.
Okay, yeah, yeah. And so for our listeners, octopus marketing or octopus business is, I think of an octopus. It's got we did have this conversation. Remember this now, Jody, where octopus marketing or an octopus business is where you have one body or one mouth, and then you have eight arms or eight legs to feed and protect that body and that mouth. And to me, this would be definitely one of those arms of business that will give me that steady flow of deals and commissions and money and steady ways of helping out other families in my community. And while I'm doing this, I'm working my past database and I'm doing my realtors, I'm doing my divorce attorneys, maybe some accountants. And this is a really solid arm. I like this one a lot, and I think it's I love it when we can solve problems, and then we all know we get paid when we help solve people's problems. I love it. I love your approach. I love your attitude. I think you're really because the other thing that I would say is the same ethics you have for protecting the client. I am 1,000% sure you take those same ethics for the loan officers that sign up with your program to make sure they get the best shot of turning this into a successful piece of their business. So good
Yeah,
stuff, Jody.
if they don't succeed, we don't succeed. So
Yeah, I love that. What's that website again?
get CDLP certified.com.
Awesome. So set something up with Jody. Tell her I said hello. Jody, thanks again. I appreciate you being here.
Thanks, Carl.